Hey everybody, Bob Adams here, doing a real quick review from Max Plans for Life called Navigating Your IQD Investments. Before I get started, I have a disclaimer. All information and discussions regarding the Iraqi dinar, events, taxes, and plans are for educational, entertainment purposes only, are general in nature, and not intended as investment, legal, or tax advice. Each person's personal and financial situation is unique and different, and the information provided may not apply or work effectively for you. Effective and established financial tax planning needs to be done by you with licensed professionals of your choosing. By signing up for, attending, participating in our informational internet or in-person workshops, seminars, or follow-up meetings, you agree that Bob Adams, David Stephenson, Tony Elder personally, and Max Plan for Life Inc. and all affiliated companies, representatives, associates, or employees, information providers, are hereby held harmless from all liability and loss associated with the information and discussions provided and as to any action or strategy you may choose to implement with regard to the same. Building and knowing your plan. Take the time to identify exactly what you want from your IQD investments. Don't get lost in that hopium cloud that doesn't get anything accomplished. Without your specific goals, you'll not be able to determine the amount of IQD you're going to need, the rate of the IQD that's going to meet your goals, and the taxable consequences. And I invite you to please use that My IQD Plan spreadsheet for the easiest calculations. There are several steps to accomplish the best results in your IQD investment, and you've already taken the first one, which was investing in the IQD. I want to talk a moment about the precious metal Roth and the reasons for establishing a precious metal Roth for your IQD investment. First, you get tax-free gains for the future. You can use it for preparing for anticipated medical expenses, and you can use it as a legacy to pass on to your heirs. Using the Roth as part of your IQD investment options requires considering your age. Are you too young? Having a tax-free environment for the majority of your working career is really a great idea. Are you too old? The Roth can be a great way to prepare for anticipated extended medical care or for a legacy to pass on to your heirs tax-free. You must use active earnings to qualify or roll over from an IRA. There's a 5 calendar year aging process, meaning it starts from the first of the year, and it doesn't matter during that time frame when you start. You have to be 59 and a half years of age in order to withdraw the funds, and the IQD must be purchased from a dealer by the custodial service provider. You must use a vaulting service to secure and insure your IQD. Now, this part of your plan, the Roth, must be created before the RV to take full advantage of the IQD investments. Gifting assignments. Now, the reason for preparing your gifting assignments: reducing your estate tax exposure. Now, if your estate value exceeds certain limitations, the governments, both federal and state, can assess a tax on it, thus reducing the value going to your heirs. It identifies your intentions to share your IQD funds by who's receiving your gift, the date of the intentions, which have to be prior to the RV date, and the amount of the intention, which can be filled in later. Assist in your overall planning based on the amount of IQD you have and the anticipated rate. Now, here's something that's a great idea. Consider using multiple assignments for each recipient. That way you can share at one value and then an option to share more at a later date and rate. So for example, like it comes out at 20 cents, you decide to share it, but later on it comes out to 50 cents. Well, suddenly your estate is going to be jeopardized and you're better off to share the IQD again. One more time, do it with a gifting assignment. Do not give the gifting assignments until after the RV. Okay, have the recipients sign the document when they receive those IQD funds from you and retain the signed documents for your records. You do not have to use them when you prepare them, but they must be created for the RV. Creating a charitable remainder UNITRUST or a CRUT. The reason for preparing the CRUT now, but not activating it until after the RV. The CRUT can be the perfect option to capitalize on a favorable exchange rate without having immediate freedom tax obligations. Freedom tax meaning they're going to zap you at the highest rate possible in the tax brackets. The documents are completed after the RV. You don't want to do it before. The rate of the IQD RV will be the determining factor. Your age will also determine the allowable percentage to receive as the beneficiary/trustee of the CRUT, and the amount of IQD USD invested is also part of the calculation. Once the desired rate is available to you, complete the documents with the calculated percentages, get an EIN for the CRUT, deliver the document, EIN, and IQD to the wealth department of the bank of your choosing to open the account. You now invest the exchanged IQD for USD in customary investments, perhaps in options provided by your bank or from other financial advisors. This can be done after the RV, but having the documents prepared now will speed up your option to take advantage of the most favorable IQD exchange rate. And this is the last one, which is really, really great. Using the CRUT and the ROTH together as your final plan. The CRUT opens the door to exchange your IQD at a favorable rate without immediate taxation. The funds can be invested in other options without having lost value from taxes. Remember, if you exchange your IQD over the counter at the teller, you have a taxable event exposed to what's called the freedom tax, which is the highest tax rate. You receive a percentage of the gross value of the CRUT as the beneficiary's trustee. You can have multiple beneficiaries and trustees on the CRUT to extend its service life. You can add more IQD to it as the value increases to defer taxes, but have a gain on your income. The CRUT can support you until you reach the aging requirements to access your ROTH gains. Then you may consider using the CRUT strictly for charitable purposes only. The CRUT can continue to provide to other beneficiaries or trustees after your passing, or the funds can go to your chosen charity as part of your legacy. This is the best combination of plans to provide a tax-free retirement while taking advantage of the IQD revaluation with deferred taxes. Now, in my presentation, I talk about the 12 steps preparing for the IQD revaluation. I want to rehearse those for you now. Step 1, review your dreams. Identify your goals. Use that My IQD plan spreadsheet if you wish. I assure you, without getting this put in place, you're locked in the cloud of hopium and you're going to end up losing your dreams. Create your tax plans, remembering freedom tax, ouch, the ROTH, the CRUT, and then retaining some IQD for later on. Do the items needed before the RV, which are most specifically the ROTH and the gifting assignments, have to be done before then. Make sure the RVs actually happened. Check online at CBI or other currency exchange sites. Select your financial institution for exchanging your IQD. You want to check the cost, FDIC options, and the security. Cashing in and paying off your debts. I told you in the presentation that when you get yourself debt-free, your perspective changes, but you must remember, this is the most expensive option, so use it carefully. Locate and secure professionals to help with your taxes, legal, and the financial planners. I told you to interview at least 6 of each and pick the one that fits into what your dreams are. Use a CRUT to secure the best RV rate with deferred taxes to support you until accessing your ROTH. Sharing your IQD gifting assignments. That's when you would do that part. Accessing your ROTH for tax-free gains when you finally got the aging requirements met. And then offsetting your tax liability using IQD for charitable contributions. One of my favorite items to do to reduce those taxes. And then 12, final, retaining IQD for possible future gains. Now, I want you to remember, you're the captain of your own financial ship. These are only ideas that may be of value in your personal planning for the IQD. Here are some services, links, and some options available that could be of value to you. Number 1, get your free My IQD plan spreadsheet from Bobthetaxman at myiqd.plan. There's also an inserted link to a YouTube video which explains all the features of it. Attend a free webinar to review your tax planning for IQD plans. Most of you already have done that. In case you have somebody else that hasn't done that yet, this would be the first step before they make an appointment with me. If you have attended it and haven't made an appointment with me yet, please use this link to make that appointment. I would love to share and spend 30 minutes with you to take a look at your personal plans. Sign up for the services provided by MaxPlan, which would include your ROTH setup, your digital preparation for your gifting assignments, and your CRUT preparation. Keep listening to Tony, obviously, and here's the link for his blogs. Now, if you're an investor at work or bank and have problems connecting with them, check this link I've got on my website. We've been able to come up with about 120 email addresses, so go use that one. Also, I put a link in there if you're going to purchase some more IQD, either for your own use or for your Roth. I have the majority of the IQD exchanges that are available on the internet there, and you can check to see what they have available and what the prices are. Most importantly, guys, I want you to remember, you own this IQD investment. It doesn't own you. And the way that works is by planning for it. Thank you much. We'll talk to you later.